Good evening, everyone. Welcome and thank you for joining me for today's business webinar. My name is Deanna Blaze, Senior Vice President of Business Banking at Valley Strong Credit Union. This evening, I'm enjoying the shared participation of my colleague, Kristen Hartzell, who's going to be assisting me with taking your questions tonight. So I encourage you to have your questions along the way, and we'll talk a little bit about our housekeeping items and how you can submit those questions through our webinar this evening. So before we get started, let's talk about some things that we're going to go through in regards to Zoom. So before we begin, I'd like to cover some housekeeping items that I do plan to answer questions from you. And if you could please submit your questions by clicking the Q&A button at the very bottom of your screen, and you'll have the opportunity to provide your questions. And Kristen will be monitoring those and will get feedback to me as we get to the end of our session this evening. So I do encourage questions throughout the conversation, and I'll be sure to get those questions answered. Now, if you feel your question has not been answered through the presentation, please remember to fill out the survey at the end of the workshop, and you can supply your question and contact information, which is going to allow me to get back to all of you with the information in case we didn't cover it in today's session. So with that, let's go ahead and move on to the beginning of our presentation and why we're all here this evening for financial management and reporting for small business. So as we get into the content, I do want to let you know we do have a participant guide that will go along with this presentation this evening, and we'll be sending that out to you at the end of the session. Typically, the participation guide is when we do give this workshop in person. As all of you know, we've moved all of our workshops via Zoom for now, but we do hope to return to a more in-person session coming forward in the coming months. So look out for more information about that. Now, I do have a small disclaimer about the workshop, and it's located in that guide, but for today, you'll find it here. So please look for that in your email box after the session. So let's talk a little bit about what we're going to cover this evening. We do have a full agenda, and I know I'm not going to have time to cover every single topic that I have in this material this evening. But inside your participant guide, you'll see some very detailed information that I'm sure will eventually pose some additional questions for you on this topic that we're speaking about tonight. So I do encourage you to go through it on your own time. And again, in the survey, feel free to reach back out to us if you'd like a one-on-one time scheduled after this workshop anytime going forward. So let's talk a little bit about the learning objectives of this workshop tonight and what we're going to cover. So I do plan to explain the concepts of financial management and why it's important to a small business. We're going to identify some good key financial management practices, some rules and tools, which are commonly available to the small business owner. And I'm also going to explain some of these financial management practices and how they're going to work. And then also go through a few just financial reporting management basics for a small business. Now, we'll also continue to cover in a few other sections in regards to financing, and you'll see some of the basics of startup financing throughout the presentation, as well as financing when your business is growing. We'll talk through a few key things there. And then we'll also talk about some working capital and basic needs for financing working capital, as well as what should being able to finance fixed assets such as equipment or things of that nature. We'll talk a little bit about that this evening as well. Now, I also want to go through with you, what do you know? Now, with this subject matter, there in the participant guide, you are going to find a good piece of information, a little bit of a test going forward. It would allow you to take a pre-test on this workshop, go through what is your knowledge today, and then you can reassess yourself, what would it be at the end of this session. I want you to know a little bit about financial reporting for the small business. So let's get into some of the meat of it, okay? And right now we're going to talk about some of the benefits you're going to receive by focusing on some of the financial management reports and how it's going to help you run your company. Now, quality financial management offers many benefits to you as a business owner, and that definitely can include bookkeeping, projections, meaning what are you going to forecast for your coming months of your business, some financial statements, and financing, as well as which forms the foundation for reaching your goals through your solid business decisions. And a lot of these reports are what's going to help you continue to managing your business going forward. It's one of the main avenues to success as a business owner. And in financial management, it's the way that you know if you're making a profit, which we all want to know, are we making a profit, or are some of our decisions causing us maybe to go the opposite direction? So it gives you the ability and the tools to overall manage your business growth. Check to see for diversification of any of your product lines. Sometimes some product lines are more productive than others, and by financial reporting, you'll be able to test that within your reports to see if you're just not getting the leverage you think or production based on a product that maybe just isn't selling in your market. So your financial reporting is going to help you with that. It may allow you to adjust your direction when you need it to help you with finding your way through some challenging times that a lot of us have been facing here currently for the last 18 months. So if your business growth requires financing, your financial management reporting will provide information to know how much you can afford for your business. It's also going to give you not only the documentation needed for a loan package, but also helps you discuss your business circumstances with your potential lender and in the terms to improve your ability to qualify for a loan that if it's needed. Now let's talk a little bit about some of the budgeting needs that I think are a really critical document that definitely helps you forecast what do you think you're going to be doing for the current year, in order also to help you manage to not overspending, but also making sure you're planning for the income coming in month over month. And especially if you are in a seasonal business, it's even more critical to handle your budget. Now, creating a budget in the first place, just to start with financial management practice, that's really the first part you want to go with. Now, a budget is just basically a list of all your monthly expenses organized by category. And a budget is a tool that helps you track all of your business expenses, plan for the future, economize when you need to, plan for expansion, and then of course, we want to make sure we're making a profit. So you can create a budget, use it to compare what you've budgeted within your annual expenditures. And then on the next category, we'll talk about some of the key points of that. So you can review the sample budget when you have the participant guide in front of you, and you can discuss each category and ask, what are the other participants or items that you have for your business expenses? Now, in this sample in the participant guide, there are just some key areas that are most commonly used by most business owners, but you can use that just as a guide. You may need to edit those on your own as it pertains maybe specifically to your type of industry. Now, keeping in mind, it's just a report that allows you to keep track of your monthly expenses and how it helps you with your business decisions going forward. Let's talk a little bit about bookkeeping. Now, bookkeeping is another very critical item, and most business owners, as they're getting started, a lot of times they spend most of their time running the business, not managing the business. And this is a real key critical area that's going to help you continue to be able to run the business more effectively. So bookkeeping is the organized process of tracking all your income and expense transactions. It's a critical component of your financial management, which leads to better decisions regarding financing, possibly your tax situation at the end of the year, any of your owner draws, but also to plan for retirement going forward. Now let's talk about a few critical bookkeeping steps. And we've got 10 that I'd like to go through with you. So first off, obtain some business accounting software. Now, proper software selection is critical for your success. And there are many software applications out there, and I do encourage you to explore the wonderful web that does allow a lot of information out there. And you can also search for your specific industry that you might be doing business in to guide you to possibly the best application out there for your line of business. Now, I also encourage you to definitely open a separate business checking account. Do not mix your business and your personal checking. It just really complicates things at the end of the year. And I promise you, it's probably going to drive the person that does your taxes for you a little crazy. The other item is, let's talk about reconciling your checking account. Now, each month you should be reconciling your account and using your business accounting software or a cloud computing reconciliation process. In now times where we do see fraud rampant out there, I'm always encouraging our business owners to definitely keep track of their bank statements and reconcile. You want to make sure that you aren't seeing any fraud in your account, and this is the first and best way to make sure. Great easy ways to utilize online banking, and you can see that real time each day. So highly encourage that. Also, the tracking of your sales. I mean, really create an airtight system for tracking sales using tools such as a register tape, invoices, or a sales book, and use the sales tracking system rigorously. It's going to help prevent you from missing out on important income, especially for all of the sales that you want to make sure that are helping you generate that profit for your business. You want to make sure you're depositing all your sales using a duplicate deposit slip or deposit all sales into your business checking account. Alternatively, there's new technology out there, whether it be mobile deposit for smaller transactions or even desktop remote deposit capture, known as RDC, could be available to you also for depositing checks right from your office. Total sales should equal total deposits. Do not spend cash sales, and link all your forms for sales documentation such as invoices, cash register tapes, and sales books with a specific deposit. The next item we'll talk about is writing your business checks for all business expenses. Try not to use petty cash system until you are experienced at bookkeeping. Now, a lot of people, of course, are moving away from actually writing business checks. There are many opportunities out there now for electronic payments, such as bill pay. A lot of good technology is out there available to you to really bring those pieces of information right at your fingertips. So we can talk to you more about what technology is out there for you. I encourage you to obtain a separate business credit card if you are going to be using a card, or if you're wanting a business debit card attached to your business checking account. I do encourage you to keep that separate from personal. And then looking for paying business expenses first. Most businesses start out as a sole proprietorship, and in a sole proprietorship, you are the owner, and typically you do not get a salary. So rather, you're going to take an owner draw. Now, a common question is, how much draw should I take? And a rule of thumb, I would say, is really about sales pays for business expenses first, personal expenses second. Now, we're also thinking about when you're running a profit and loss statement, or referred to as your income statement, a checking account balance is not a good indication how much profit your business is making or not making. So it's your profit and loss and income statement that can provide a better picture of the financial health of your business. So that's where we're going to talk about that in a little more detail further on in the presentation. Now, when you pay yourself with your owner draw, owners should pay themselves by writing a check or a transfer and doing an electronic transfer from the business account to the personal account. If you're a sole proprietor, you can assign those draws to an equity account called draws. Now, I'm getting into some of the different software applications I had mentioned previously. A quick note about using financial software. If you're not already using it, I definitely recommend that you start. Try not to rely on paper to record your financials. It's really just going to drive you a little bonkers. Some people do start out with a basic Excel spreadsheet, which is okay too, but I do highly encourage you to get comfortable with a accounting software of some type. We recommend QuickBooks as one commonly used software application out there, which automatically, as you put information into your reporting, it's going to also automatically generate some of these reports we've been already talking about. So awesome tool there. There are many practical reasons to purchase and learn how to use off-the-shelf or financial management software. But if you're unfamiliar with how to use it, you can take a course at one of our local colleges. And also our Small Business Development Center offers some great tools and resources for business owners as well. So definitely take advantage of that. And this is a great way to invest in your company and in yourself. So I highly recommend that. So let's talk about a few of the financial statements. And a lot of times, if you're approaching your lender and needing some help with financing some of the items that you need to run your business a little bit better, whether it be some equipment or potentially some working capital, this is where these reports are going to come in handy. So we'll talk a little bit about the financial health and cash flows. And there are about three basic statements that you're going to want to get familiar with, and that is the balance sheet, your cash flow projections, also sometimes called your cash flow statement, profit and loss statement, also called the income statement. Now, we're not going to have enough time to go into these three statements in great detail, but I do want to refer you to the detailed information in your participant guide that you'll be receiving at the end of this presentation. Now, here's an example that you will be able to go back if you're making notes on your own to pages 10 through 13 in your guide. And I've provided a high-level overview, and there's more details that you can read on your own time. But this is just a small example of what your assets and liabilities would look like to create a balance sheet snapshot. Now, subsequent balance sheets are prepared at the conclusion of an accounting period, such as monthly, quarterly, or year end, and a balance sheet reports the dollar value of your company's assets, your liabilities, payments you've made, and your owner's equity at a specific point in time. So the assets include cash, your accounts receivable, inventory, investments, land, buildings, equipment, and some intangible items and other assets. Now, your liabilities are the debt or any other obligation of the company and include your loans payable, accounts payable, tax payable, and more. And then your owner's equity shows the amount of assets that came from you, the owner, and not creditors. So your balance sheet tells a story about your assets, your company controls, such as cash, equipment, and inventory. The balance sheet is going to explain who owns those assets, someone else, such as the creditor, or you, the owners and owner's equity. How much working capital or cash you have to run your business, and if the company is highly leveraged or carrying too much debt. So this is why these reports are so critical to help you manage your business on a day-to-day basis. Now let's talk a little bit about reviewing this detailed balance sheet. Again, you're going to want to refer to page 12 in your guide. And then what story does this balance sheet tell? Now, it tells a story about this business. It's like a photograph or a snapshot, I always say, and it's definitely going to illustrate how a business looks, but it's only at a specific point in time. And as a simplified opening balance sheet, it's going to tell us how much money came into the business, where it came from, either debt or equity, and how that money was used to purchase assets used in the business. And any remaining money is also an asset called your working capital, and that's used to run the day-to-day operations of the business. Let's get into your financial statements and cash flow. So it's defined in two ways: your balance of cash received less the amount of cash paid out over a period of time. And it's basically the moving of cash in and out of your business. So you're definitely going to be able to manage, do you have enough cash coming in on a monthly basis in order to pay all the debts and potentially your payroll going forward on that monthly basis. You also want to take a look at your cash flow projections. And this is going to be the financial statement that tries to show how cash is expected to flow in and out of your business over a future period of time. And this projection is used to see if projected cash, which is your income coming in, will be sufficient to your projected cash disbursements or your outflows going out. Now, a business can be profitable and still run out of cash. So as a banker might say, cash flow projections provide the visibility needed to avoid liquidity problems. Or in other words, a cash flow projection is really just a tool to help you manage your cash so you can pay your bills on a timely basis and definitely keep your doors open. So you'll want to learn a little bit more about that report. Now, also your cash flow projection is a great tool for setting sales goals and also for planning for expenses, especially if you're in a seasonal business where you need to make sure you have enough cash coming in the right times of the year in order to offset some of the expenses maybe paid early on, in order to balance that out and manage that credit you may have with maybe one of your vendor providers. So if you need to plan for a large expenditure, such as an equipment purchase, or maybe moving into a new location, your cash flow projections is the perfect tool to help you plan for that. So similarly, if on your seasonal business with large inventory purchases, such as maybe a business that you have heavy inventory purchases during the holidays or leading up to the holidays, this projection can also help you have the cash on hand to make a large inventory investment when you need it. Now, your P&L statement can mask cash shortages if you use accrual accounting. So a cash flow projection helps you see the cash status of your business now and planning into the future. A cash flow projection is a good way to prepare and plan for your financing needs and is often a required part of a business loan application as well. Not always, but some of the time, just depending on your particular situation. Now, getting into what a sample cash flow projection will look like, we'll cover it here briefly. We'll look at the first set of rows titled Sources of Cash. You can document all sources of incoming, including cash from customer sales, maybe some interest earned, loans funded, and current checking and savings account balances. The second section covers the operating uses of cash, which contains all the expenditures associated with the day-to-day buying and selling processes for your current business. Now, most of these expenses show up on your profit and loss statement. And the third section, non-operating uses of cash, shows the expenses that normally show up on your balance sheet. So typically like your equipment purchases, maybe just a principal portion of your loan payments, inventory. You're going to want to account for taxes. And again, your owner draws, and then subtract your uses of cash from your total cash available, and you'll have your ending cash for the month. Now, the ending cash for 1 month becomes the opening cash for your next month. So you would continue that on month over month until you've completed your full year cycle to project out where your year is going to look for your cash. Now, let's talk about the cash flow projection and a few more strategy ideas for creating a positive cash flow. Now, increase the number of items sold is one way that you can control that a little bit more. You can also increase the price of an item that you're selling or service. You can also look at reducing expenses. That's another way to look at it. And you can also look at the change of timing in expenses. Sometimes you could take advantage of discounts with vendors that may benefit your company, or you might be able to stretch things out during certain times of the year, but you'll want to work with your vendors when that happens. Now, you can save money to have sufficient opening cash to get through the startup period if you are a startup company. Now, here are some strategies also. We'll continue with improving that positive cash flow. And you can obtain sources of cash other than sales, also such as a line of credit when needed. You can reduce or change the timing of your owner draw that you might be taking. You can research vendor options for buying inventory at a lower price or obtaining credit from your vendor, or establish policies to get paid sooner from your customers. Again, you can provide a discount if they pay you sooner, etc. So think of those different strategies when you're focused on making sure you have cash at the right time. Well, let's talk about financial statement and the profit and loss. Now, this is the best tool for knowing if your business is profitable. Your profit and loss statement measures your revenue, also called your sales or your income. So keep those terms in simple format. And then your expenses, of course, over a month, a quarter, or a year. So with it, you know if you have made profit and how much, or if you've incurred a loss for the year. Now, most important financial management report is probably the profit and loss statement, I would say. It's going to reflect your business decisions on the basic buying and selling process. And a P&L will also tell you how well you are managing your business and provide information on how to grow your business going forward. Now, the basic concept here for the formula of the profit and loss statement is your sales minus your cost of goods sold equals your gross profit, and then minus your overhead equals your net profit. Now, your sales on your revenue, total amount from selling your product or service on that month or quarter. Now, your cost of goods is going to be made up of your total expenditures for inventory items, which customers typically buy. Most of your goods sold consist of the cost of purchasing those items, freight, manufacturing costs, modification costs, and any packaging. And for a service type of a business, This is the cost of providing the services, including labor, materials used, and possibly transportation. Your gross profit is your sales less cost of goods sold. And then again, your overhead is your expenses associated with your ongoing business operation, which leaves you with your gross profit less overhead. Now, your net profit is what remains to pay for your expansion that you're planning for, maybe that equipment that you needed to purchase in order to bring on that new customer that you were hoping to land, or that you did land, and then also potentially any loan repayment if you had a loan to get yourself started, or maybe you moved into a new building. You're going to account for your income taxes and again, your owner draws. So how do I compile a profit and loss statement? Easy, they say, right? Well, it can be easy for you if you have a business accounting software. So you'll hear me say that quite a bit, and I highly encourage you to take advantage of that early on, especially if you've just gotten started and still learning what to do here. I highly recommend you get started on the right foot right away. It's going to build you a sound business foundation. So as I mentioned before, invest in business financial management or some type of an accounting software that's going to fit your business industry. Try not to use your paper to track your financial health of your business, as your business may take off and get really booming and you need to be running the business. By keeping track of this on a daily basis, weekly, and staying on top of it, it's going to help you make sure that you're telling a good financial story for yourself and you're managing ahead of time versus coming into some surprises. So the accuracy of your P&L statement will depend, of course, on how it's set up for your company. And it is also dependent upon the data that you put into it. So sometimes we like to say garbage in, garbage out. So pay close attention of how you're tracking your income and expenses. Sometimes it's easy to select potentially a wrong category, but that can quickly, easily be fixed. So use that profit and loss statement as the basis for building a cash flow projection. Now, in reviewing the sample profit and loss statement, I'd ask you a few questions once you have it in hand. But some of the things I'd like you to ask yourself is, what do you see about your business? Is your business well managed? Does any problem stand out to you? And what about growth potential? Will the business support the owner? Will the business be able to get a loan if they need a loan and they needed some equipment, or they're trying to definitely get into a building they've been hoping to expand into? You won't be able to tell that story if you don't have the proper method of telling your business financial story. So the following core items here are definitely elements in business financing when it comes to needing financing. Now, equity financing is invested funds that stay in the business, often permanently. So for most small businesses, equity comes from you, the owner, or from family savings, and is frequently the only source of funds for startups when you're just getting started. For large, fast-growing companies, venture capital can sometimes be accessed for equity. Another option is debt financing, which is borrowed funds that are paid back, and the cost of debt financing is the interest paid back to your lender. Now, working capital is used to acquire funds needed to run your daily operations of the business, such as maybe inventory or some overhead items. Let's say you need to add on some new employees. Now, fixed asset financing is used for purchasing equipment, vehicles, and real estate, and typically is over a longer period of time. Let's talk a few things around business financing, some really good do's and don'ts for you as a small business owner when it comes to financing. Now, when you're investing your own money, you need to invest your own money first, especially if you're just getting started in business, before you ask for equity or debt or a loan from other sources. Most lenders are going to ask for what is your skin in the game, and it's going to show that you have a commitment and also shows that you have some skill initially in running your business in a successful manner. I almost like to refer it to earning the right to borrow. And generally, borrowing is it's not a right, rather the ability to borrow is an earned privilege. So obtain others' investments, you need to demonstrate your ability to manage debt well and to run a profitable company. So without being able to tell your financial story in the previous reports that we just discussed, it may become very difficult for you to achieve the item that you're looking for when it comes to needing borrowed funds. You've got to be able to show some profitability, and profits are what lenders or investors want to see. So do not get led, lax management or that to inhibit your healthy bottom line. So again, I encourage you, start with a great foundation and continue that. And if you don't have the ability to handle that on your own, I highly recommend that you connect with someone such as a QuickBook Pro advisor or talk with several bookkeepers in your given market that do this service that you can consult with them. It'll be money well spent. And oftentimes consultations are free just to learn of how this is going to implement your business and going forward. Now, understanding and retaining your working capital, an experienced business owner knows that working capital is critical. And on the other hand, working capital is sometimes overlooked or misunderstood by new business owners. So as your business grows, the amount of working capital cycling through your business to support operations should be growing as well. So successful business owners stay aware of their working capital needs to grow and sustain their business. Now, when it comes to fixed assets, being lean is the best way getting started out, or even if you're existing in business. New business owners sometimes think they need to purchase fixed assets to start or grow a business, but fixed assets consume precious working capital through down payments and monthly loan payments, which depletes your cash flow from your cash flow projections. So whenever possible, new business owners should buy as few fixed assets as possible. And when necessary, maybe new business owners should consider buying used assets or leasing them in order to stretch that dollar a little bit further. So you're going to want to match your sources and uses when you're financing current assets as well, which typically is your accounts receivable and your inventory, which usually is financed with a line of credit or maybe even a credit card if it's on a small side. Now, your fixed assets should always be financed with long-term loans that match the use life of that particular asset. So you can make the mistake of buying a fixed asset with a line of credit, which then causes misfinancing. And then it's forcing you to pay quicker and depleting your cash when that really should have spread out over a longer period of time. It's going to dip into your profits and being able to repay maybe your working operation or even payroll at sometimes. Now let's talk about your understanding of financial statements. And most types of financing require an application process that asks for business financial statements, such as what we've been discussing, your profit and loss statement, a balance sheet, and a cash flow projection. You want to know your financial statements well and be able to discuss them intelligently with whoever you're speaking to about potentially getting a loan if that's what's needed. Now, you also want to understand your collateral options, and most loans do require assets or your collateral be pledged as security for the loan. In the event that you may default on the loan, the collateral could be sold. So be prepared to discuss your collateral options with your lender to make sure you understand what you're getting into. Also understand the risks and cost of the different loan types. Each type of loan does carry some inherent associated risks and costs. So for example, while a credit card may be easy to use, credit card financing may be a very expensive form of credit. In many cases, a small business loan, maybe even guaranteed by the SBA, will be a better form of a loan than a credit card. Now, the other item we say about grants, there is a common belief that government grants are available for businesses. And in some cases, we just experienced that with PPP, which actually became somewhat of a form of a grant. With a few rare exceptions, grants usually are not available for most business owners. They can be available to nonprofit organizations at times as well. Now, shop around for the best loan. You may want to start with you already have personal relationships at that institution. So for example, if you have a personal account at a credit union or bank, I would definitely recommend that you start there. And then also check into the SBA loan guarantees available at most commercial banks and credit unions that are available. You can get mentoring and advice also through the Small Business Development Center locally. We have a great one here in town. And don't rule out, banks and credit unions when it comes to having a good working relationship. The FDIC and NCUA have great educational resources as well, so don't lose sight of that. Now, here are a few steps you can take to prepare for a loan if you do need a loan package put together. Let's walk through a few of those items. So Having a business plan, if you are getting started, I always recommend you start there. A business plan is going to help you understand, what am I getting myself into? And it really makes you think about all the different items that you may not have considered. Make sure you have a good up-to-date plan as far as like your entity structure, and that you've thought through, meaning, are you going to be a sole proprietor, a corporation? Are you a partnership or an LLC? All of these things show a lender that you have reasonably propositioned with a solid repayment plan that will help as well. So your business plan is also going to show that you've researched and undertaken and established what potential income you have coming in, but then also the costs associated with marketing or other sales strategies. You're going to have an opening statement. It usually lists your business owners. It's going to describe your business and how it will make a profit, provide financial statements and a P&L statement, as well as cash flow projections. They want to see, what are you planning to do? And you can also provide other documents such as references, your proof of insurance, etc., to help you state your case. Now, know what you can afford. Now, using likely loan terms, calculate the amount of funds you will need and the monthly loan payment. Your plan should include your repayment plan with projections that show your ability to make your monthly loan payment. You definitely want to study your financial statements. As I previously mentioned, the lender's going to want to see your financial statements. Not only do you need to provide accurate, current, and historical statements, you're going to need to know what your statements say about your business. And definitely be prepared to discuss these details of what's happening in your business. And don't take offense to the questions that are coming in. Your lender is basically just going to want to know the story of your business, how you got started, where you're headed with the money. What do you need the loan funds for? What do you intend to use those loans for? It's going to help the lender understand how they would need to structure the loan setting up for you and have a good conversation. You're going to want to check your credit report, and you can get a free credit report of your report each year. So study that ahead of time, make sure there's no surprises, and make sure it's accurate. And you can also work on fixing any inaccuracies and be prepared to explain any credit issues if you see them up front. It just shows that you've done your due diligence and you're really preparing for what this is going to look like going forward. You can also establish what your collateral options may be, because that discussion will come up, and be prepared to talk about that with your lender. Now, you may be wanting to purchase a piece of equipment, let's say a backhoe, or maybe it's a printer, or maybe it's software for your office. That asset is often the collateral for the loan. So lines of credit are sometimes unsecured if a business owner can show a strong history of profitability, but it's not uncommon to use personal assets to collateralize a business loan, especially in the beginning stages. Now, you're going to want to show your owner contribution. So lenders usually require what's called your equity contribution for a startup loan or a loan for an expansion project. The required cash contribution can range from 10 to 30% of your total projected cost. So research that going in. You're going to need to choose between many lenders and many types of loans. So I recommend that you at least explore 3 options to ensure that you are obtaining financing from definitely credible resources sources as well. They can come in all different pricing and all different structures. So do your homework. Don't just stop at the first point you go into or the first institution. Let's talk about what may go into your loan package if that's something that you're going to need. Loan packages require a lot of preparation and documentation. So let's just go through a quick list to help you get started. And we won't go into major detail, but you may want to consider a business plan. Although if you've been a business and seasoned business, the business plan may not be required. So that's a nice to have later on, but may not always be required. Then, of course, your business financial statements we've been talking about, they're going to want to see your statements typically over the past 3 years. So don't be surprised by that, as well as current statements, which usually are referred to your interim. So if you have a calendar year end, January through December, and December is your year end, but right now we're still in the month of September, you would have an interim statement from January through September as an example. So that would be your current financial statement. They're also going to want to see a personal financial statement, which shows your personal assets, your liabilities, and your net worth for you personally as the business owner. And more than likely, your lender is going to want to see that from any other company that you may own as well. And of course, any business owner that's 20% or more owner in that company. So don't be surprised when that is asked for. Okay, it's very common in the industry. Now, your personal and business tax returns are often asked for, depending upon the loan dollar amount, typically up to 3 years of information on your past tax returns for both business and personal. So again, don't be surprised by that ask, but it does depend on the dollar amount that you may be asking for at any institution. So know that that's a very common request going into getting a loan. Now, some of the other elements of your loan package are going to be looking at your source and amount of your equity contribution, or what is your owner contribution, and usually require the business owner to contribute anywhere from 10 to 30% of whatever total project amount that you have in cash or in your equity. And you're going to include a write-up documenting the amount and source of your equity contribution. You'd want to know the credit report. The lender will order your credit report, but it's important, again, for you to know what they're going to see on that report. Make sure you've addressed any issues they may find up front. Now, onto the collateral side of it, your lender's usually going to require collateral, so keep that in mind, and include options for collateral on your application ahead of time. Know potentially what the value is of those items. Typically, that does get reported on your balance sheet as well. Any purchase agreements or appraisals or contracts that can estimate it, you can always include that within your loan package. Now let's talk about what qualifying for the loan looks like. And one of the items definitely you're going to make sure you have is good credit, understanding your score, what your equity contribution is going to be, making sure you've got sufficient amount of your own skin in the game based on the percentage required. So don't be surprised by that. And then your ability to repay the lender. Know initially, an idea of what that payment's going to look like, to give yourself an idea. Can I handle that with my current obligations already in place? And know what your loan to value ratio is going to be. Lenders tend to loan between 70 and 90%. So it really depends on what your needs are. So keep that in mind. Now, some of the startup financing, if you happen to be a business owner that is just getting started or has been in business maybe for less than 2 years, that's usually a difficult time to seek financing at a bank or a credit union. But some of the things I definitely want you to keep in mind if you are a startup business here today is think about your own equity. It's basically your own money. How much of your own money do you have to get started? And then, of course, your sweat equity, doing things yourself. Don't rule that out. If you're running a startup company, you're going to be the jack of all trades. Maybe you can't afford that person to hire them right away. So you're going to wear a lot of hats in the beginning. Sometimes people do use credit cards to get themselves started. So remember, keep in mind, you're going to want that separate credit card for your business, and keep those balances separate to help you know your financial reporting, that you're not commingling those two things. And then, of course, sometimes you can reach out to your family who are going to support you in wanting to get that business off the ground. You can go to your family sometimes for equity contribution. And then when it comes time for looking for a loan, let's take a look at what your opportunities are. Now, you can focus on your banks and credit unions that are going to have ability to get you started. Or if you're an ongoing business, of course, you have access through that area. Some regional lending options may include also community development financing organizations. Sometimes your economic development department can assist you. We were talking about the Small Business Development Center, which also has women's business centers as well, or even veterans business outreach. There's some micro enterprise development loan programs out there. There's a USDA Rural Development Office, and then of course your regional SBA office. So don't rule those items out. Make sure you're noting those opportunities. And then a few key points to remember as we get into the financing basics that we've talked about. Financing is really getting the money you need to start, operate, or grow your business. So start again, let's recall, starting with your budget. Your sound bookkeeping is a basis for all financial management. So please think about that when you're running your business, how critical it is to manage that. At a minimum, I always recommend on a monthly basis. utilize that purchasing financial management software and definitely learn how to use it. And then, of course, the 3 statements we've been talking about, your balance sheet, your cash flow statement, and profit and loss statement. They provide your best compelling story to describe how well your business is doing, or discover for yourself if you've got some pitfalls and you're overspending versus the income coming in. So that's going to help you tell your business financial story. And then last but not least, one of the biggest important ones is separating that personal and business records and your funds. Those factors that definitely affect your ability to get a loan are your credit score, your equity contribution or skin in the game, and your repayment ability, and as well your loan to value. So I know we've covered a lot of information tonight, and you can load some final questions in the Q&A section, and we will get to answering some of that here right now. So let me see what we have in our chat and the Q&A section as we get started there. So I'm going to conclude that with financial management is the why and why it's important, your common financial management practices, rules, and tools, and remembering your financing basics are startup financing, financing for growing your business, working capital, and fixed assets. Now, I've got to mention here that in your participant guide, there was a pre-test and a post-test. Take a look at that on your own time. I also encourage you to definitely complete and return the evaluation form. We have 2 forms of evaluation. There is one in your participant guide. If you'd like to complete that and email it to deanna.blaze@valleystrong.com, you can do that. The What Do You Know form on page 4 of your participant guide lets you compare how much you knew before the class and how much you've learned. So you can take a few minutes once you get that after the session if you prefer, and you can test your understanding going forward since you've completed this workshop. So we'll stop there and see if there are any questions, Kristen, from the crowd.
We do have some questions. Thank you. The first one is, what software programs do you recommend for bookkeeping?
All right, so I'm definitely going to recommend out there QuickBooks. There's another application out there called Xero, FreshBooks, and there's also another QuickBooks application out there called QuickBooks Self-Employed, and then another new one called Wave, and that's just a few out there. I encourage people to Google as well. You can Google your industry, through bookkeeping software, especially if you're concerned with making sure you're getting software related to your specific industry. But good rule of thumb is QuickBooks is a great software application out there that can help you get started or even maintain your business as it is today. Great question.
Thank you, Deanna. Another question that we have is, how often should I be looking at my profit and loss?
Personally, I would recommend, again, going back to some of my previous comments, I highly recommend at least monthly. That's really to make sure that you're going to be staying on top of your income and expenses. And if you're not doing that on a monthly basis, that's where really most business owners really run into pitfalls and think, wow, gosh, if I had just done that ahead of time, I might not have had myself in the position I find myself in. So if you can, I highly recommend it a minimum monthly, but definitely record daily transactions in your accounting software we've been talking about. That will allow you to produce those reports at the end of the month really easily. So to me, if you can do those entries daily, that's highly preferred.
Thank you, Deanna. We have one final question that came in about software. Do the accounting software packages offer budgeting templates?
That's another really good question. A lot of the applications do offer budgeting templates. You can look at those even through online when you're researching these tools. Look for the ones that do offer those templates. Now, of course, they're going to give you really rough estimates on the different line items for your income and expenses. But you also, within those templates, you'll have the ability to edit a lot of those line items or input anything that really applies to your specific industry. But it's definitely going to make it much easier for you to plan for these particular items.
Thank you, Deanna. Those are all of the questions that we have at this time.
Okay, wonderful. Well, at this time then, you can call us at Valley Strong Credit Union or visiting valleystrong.com. Our number here is 661-833-7530. You can learn how our local business banking team can help you grow your business. With that, I'd like to thank you for attending our webinar this evening on behalf of Valley Strong Credit Union and my teammate here, Kristen Hartzell. Thank you for attending our financial management reporting workshop for small business and making the choice to attend our virtual workshop this evening. Have a great night, everyone.